You know that there are two sources of finance, owner's fund and borrowed funds. Finance, as we all know, is essential for running a business. Success of a business depends on how well the finance is managed by a business and how cheaply they arrange it from outside or from within the business. Almost all business activity requires some finance. Finance is needed to establish a business, to run it, to modernize it, to expand it, and to diversify it. It is also required for buying variety of assets. It can be in the form of buying tangible assets like machinery, factories, buildings, etc. Also buying intangible assets like trademark, patents, technical expertise, etc. Finance is also required to run the day-to-day operations of the business like buying materials, paying the expenses in the form of bills, salaries, or collecting cash from customers or debtors, which actually takes place at every stage in the life of a business entity. Availability of adequate finance is thus very crucial for the survival and growth of the business. Financial management is a term which means that optimal procurement as well as usage of finance. So it is concerned with optimum procurement as well as usage of finance. For optimal procurement, different available sources of finance are identified and compared in terms of their cost and associated risk. But the primary aim of any financial management remains to maximize the shareholders' wealth. What exactly do you mean by maximizing the shareholders' wealth? It means wealth maximization or adding value to the share prices of the equity shares. In detail, if I tell you what is wealth maximization, equity shareholders are the owners of the company. Company funds belong to the shareholders, and the aim of any company or business is to maximize the current price of equity shares. That is what is meant by maximizing the wealth of the owners. So, to maximize the current price of equity shares is wealth maximization. So how does the market price of equity share increases? It will increase because of some decision taken, and this decision should have a benefit over the cost. All financial decisions taken by a business aims only to ensure that each decision adds some value to the shareholders' wealth. Those financial decisions which will ultimately prove gainful from the point of view of the shareholders is valid and it is taken, and a poor financial decision can result in decline in share prices. So this is what does it mean by wealth maximization.